Hello everyone, and welcome to the Financial Prophet. We have a very interesting show for you today. We haven't discussed this company for a while, so today we will focus on one of my favorite companies globally, Tesla. The last time I wrote about Tesla, I downgraded the stock from a strong buy to a buy. Still, the company's stock surged by about 44% since my early April call, hitting a high of around $360 before heading south again. So here we are, and Tesla's roller coaster ride continues. Despite achieving many remarkable feats, Tesla remains one of the most controversial companies in the world. However, this is not anything new. Many people began betting it would fail shortly after it IPO'd in 2010. In fact, NBC, including Jim Cramer, dissuaded me from buying the stock in its very early days. Nonetheless, Tesla stock has appreciated by about 25,000% since then, making it one of the best equity investments and worst shorts of all time. I also feel very fortunate that I began investing in Tesla stock in 2013. Here's a long-term chart of Tesla just so we get an understanding of exactly how much Tesla has appreciated over the years. Still, Elon Musk, while arguably brilliant, is an eccentric CEO. And with eccentricity comes volatility, and we've seen plenty of volatility in Tesla's stock as of late. Tesla stock crashed from an all-time high of nearly $490 in late 2024 to a low of only about $208 during the March-April meltdown, which equates to about a 57% decline. Teslas were literally burning as vandals firebombed dealerships and harassed Tesla owners, in part because of Elon Musk's association with the incoming president and Doge. Now that the president and Elon Musk had a falling out, there's more new controversy. Tesla's tax credit revenues are going away due to the big, beautiful bill, and Elon Musk is forming a third political party, the American Party. While the president and others call this ridiculous, I wouldn't be so quick as to write Mr. Musk off. After all, the new American Party could take the place and absorb the Libertarian Party, which could even attract some prominent Republicans like Rand Paul and others. Therefore, the formation of a third party could actually turn out to be a net positive for Tesla and the United States and the world, especially in the intermediate and long term. However, I'm not here to discuss politics. In fact, I believe that politics distract investors from the main investment points. So, let's discuss 5 reasons to own Tesla stock here and now. Number 1, Tesla sales could recover more rapidly than anticipated in future quarters, and I believe that the recent deliveries report illustrates just that. Deliveries were not as bad as expected. Sales could continue recovering as buyers return. Moreover, in the near term, Tesla sales could even spike because of buyers rushing in to still get the tax credits. Number 2, Tesla's autonomous and robotaxi business has enormous potential. Despite competition, Tesla may have the ability to, quote, corner the market because of its enormous ecosystem, AI advancements, and proprietary technologies. Number 3, Tesla's energy generation and storage business continues to boom and should continue expanding. The energy business alone could be valued at about $200 billion. Number 4, Tesla continues to make tremendous leaps in robotics. Have you seen Tesla's robots relative to their so-called competitors? Aesthetic and functionality-wise, Tesla could have the best-selling robots on the market, and the future sales potential appears to be absolutely staggering. Number 5, the risks from the political fallout may be short-term and exaggerated. While the EV tax credits are going away, Tesla's business does not depend on tax credits. and it can increase profitability regardless of government subsidy. Now, let's talk about Tesla's deliveries actually being better than expected. Tesla delivered 384,122 vehicles in the second quarter. While this was slightly lower than the 389,000 consensus estimate, the whisper numbers were only about 365,000. This dynamic may also illustrate that the worst may be behind Tesla sales-wise, and we may see continued improvements from here. So here's a chart of Tesla's production and delivery figures. Based on the provided delivery figures, Tesla could meet or even beat its earnings estimates on July 23rd. Currently, the market expects Tesla to report about $22.61 billion in sales and about 43 cents in normalized earnings per share. So I would like to share my estimates with you and how I got to my estimates. Let's start with the Model 3Y segment deliveries, which may have been approximately 366,253 cars once adjusted for lease accounting. Now, due to the introduction of the refreshed Model Y vehicle and its higher cost, the average selling price in the Model 3 Model Y space may have been approximately $40,000, which equates to roughly $14.65 billion in revenues for the second quarter. Now, also, provided that Tesla likely sold very few semis in Q2 and likely not that many Cybertrucks, let's be honest. It's not the best looking vehicle, let's just leave it at that. So the quote other model segment was probably dominated by Model S and Model X sales. Now, my estimated ASP in this segment, once adjusted for lease accounting, is roughly $95,000, implying sales of roughly $920 million in the other model space. Now, the energy generation and storage business continues to boom and expand at a very healthy pace. Last quarter's revenues came in at $2.73 billion, illustrating about a 66% year-over-year increase. My Q2 estimate is for $3 billion, so a pretty minor increase over the $2.73 billion that we witnessed last quarter. Now, talking about leasing revenues, they could have been about $480 million last quarter. Services and other sales were probably approximately $2.9 billion, and regulatory credit revenues may have been around $700 million last quarter. So let's do the math here. Total Q2 sales estimates: Model 3Y segment $14.65 billion, other models revenues $920 million, leasing sales about $480 million, regulatory credits roughly $700 million, energy generation and storage $3 billion, and services and other $2.9 billion. So this leaves us with a figure of about $22.65 billion in sales, slightly above the consensus estimate. Let's do some more math here. Growth margin wise, Tesla's growth margin may have been about 17% last quarter, which brings us to a gross profit of about $3.85 billion. Operating expenses wise, roughly about $2.7 billion in my view, which leaves us with an operating income of about $1.15 billion and an operating margin of roughly 5.1%. Once we incorporate the interest, income, expenses, and other, that could equate to about $250 million, which would bring Tesla's net income to around $1.4 billion for the second quarter. In normalized EPS terms, that's about 44 cents, so just slightly above the consensus estimate. Granted, my numbers are pretty close to the consensus estimate. However, even with just minor beats, the stock could react well, as investors may look past this current challenging phase as the intermediate and longer term bullish catalysts remain intact. Tesla still has the leading position in FSD, robotics, the robotaxi business, AI, energy, and other segments that could propel sales and earnings considerably higher as we advance. Moreover, Elon Musk forming a third political party may turn out to be a net positive for Tesla, as the American party could gather traction, which could then lead to more favorable legislation toward EVs and sustainable energy in general. So let's look at my Tesla projections going forward for the next few years. Revenue-wise, we could see about 112 billion this year, which would represent a revenue growth of about 15%. We could see sales increasing to about 138 billion next year, which would be about a 23% year-over-year increase. And as the FSD business, robo-taxis, possibly even robotics gain more traction, we could see revenues increasing to about 173 billion in 2027, 220 billion in 2028, and we may see revenues at about 325 billion by 2030 or even sooner in a more bullish case scenario. Now, earnings per share wise, I'm looking for about $2.50 this year, then an increase to roughly $4.70 next year, and ultimately we could see EPS of about $10 in 2028 and potentially increasing to the $15-$20 range by 2029 and 2030. So I am implementing a relatively high price to earnings ratio, but that's because Tesla has enormous potential in FSD, robo-taxis, robotics, AI, and all of these businesses are higher margin businesses. So I believe that Tesla deserves to trade at a premium multiple. And it's not just me, the market seems to agree with me. While I am implementing a relatively high P ratio, it is due to some valid reasons in my view. And also in a more bullish case scenario, Tesla could post higher than expected sales and earnings per share growth. So while I've lowered some of my estimates since my previous projections due to the coming phase out of EV tax credits, some political uncertainties, and other variables, still I believe these earnings per share and sales estimates could be reversed and lifted higher once more visibility returns to Tesla's earnings potential and its bottom line prospects, especially in the FSD robotaxi space and robotics a little bit further down the line. In a more bullish case outcome, I believe Tesla stock could achieve about a $2,500 to a $3,000 price range by 2030. Now, please remember that none of this is actual investment advice. This is me just sharing my opinions about one of my favorite companies. Now, let's discuss some risks to Tesla. Despite my bullish analysis and projections, Tesla does face certain risks. The political situation is considered a significant risk, as the formation of a third political party may take time and focus away from Elon Musk's duties as Tesla's CEO. Additionally, the phase out of EV tax credits could impact Tesla's bottom line more than expected, especially in 2026. Furthermore, there's some uncertainty regarding the speed and scale of the robotaxi rollout, and there may be regulation issues down the line as well. Tesla also faces sales declines and other concerns in various markets. In general, there is increased uncertainty regarding sales and profitability growth in the near term. Now, I believe that investors should consider these and other risks before investing in Tesla's stock. So, I would like to thank you very much for watching my profit report. I truly hope that you enjoyed it, and more importantly, I hope that the knowledge you gain here helps you make more informed investment decisions in the future. I would also greatly appreciate hearing your comments, so please join the conversation in the comments section below. If you enjoyed my video, please click like, share, and subscribe to my channel so I can continue creating these highly informative and potentially very profitable videos for you. You can also join the Financial Profit, my exclusive investment community, which is seeking Alpha's #1 service for proven portfolio profits. So don't hesitate to join our incredible investment community if you haven't already. Thank you very much for watching. See you next time and have a wonderful day.